Hello and welcome to the Market Outlook webinar. If you're watching the recorded version of this, it was held live on Wednesday, the 16th of November at 12:30 in the afternoon. I'm David Jones and I do these in conjunction with Aondo Markets. I just put the risk warning up there while I'm talking. Today probably runs for half an hour and we'll take a look at a mix of FX, indices and some of the commodities, just to really try and see what the trends have been over the last week. And there are some definite trends, particularly when it comes to the dollar. We'll take a look at a few currency pairs today because we are seeing, quite a run of dollar strength now that Trump is going to be going into the White House, reversing the sharp sort of dollar weakness that we saw when the results were coming out. The story over the last week has been about the dollar gaining ground, and we've got some big levels to keep an eye on, I think, in the days coming up. So we'll take a look at that. Indices are a bit range bound, but there have been some good opportunities, so we'll talk more about that. But I think for now that risk warning has been up for long enough, so let's flip over and look at a chart. So what we're going to look at, what we're looking at here, this is Aondo's trading platform, this is TradeHub. So these are their charts, and we're going to take a look at the euro dollar first of all. Actually, if we just maybe go back just to where we were a week ago, I think it's been a really surprising move. So it's been surprising as far as I'm concerned. This was the early hours of the morning last week when we had the results of the US election coming out, and when it looked as if Donald Trump was going to win, not surprisingly at all, we saw, this is euro dollar, we saw euro strength. Everyone was expecting dollar weakness if, surprisingly, Trump won. So we saw that, but we saw it reversed really quickly. Touched 113, then it reversed, and it's just broken lower. So we've lost something like, what's that, 600 points off those highs for euro dollar over the last week. So it has been, I think, quite an incredible turnaround in the dollar's fortunes. And we'll take a look at a few longer term charts today because there really are some big levels coming up. Just to put this euro move in perspective. So that's the spike there. You can see we're now on a daily chart for euro dollar. So that's the spike you can see when the results were coming out. And you can see just the size of the reversal since then, and it's still going down. Once again today, it's pushed to a fresh low for this down move. It's taken out those old lows from the end of December, around about the 107 level. And it's really interesting. I wouldn't have expected this at all, to be perfectly honest with you. And I haven't traded this. But last year, for much of last year, it looked like euro dollar was forming this basing pattern. We'd had the big decline in euro dollar for much of 2014, going from 138, 140 down almost to parity with the US dollar. And now we're coming back to test these levels again. So there really are, if it gets down there, some absolutely major levels down here for euro dollar to keep an eye on. 104.60 looks like the low from February, and that's only a couple of 230 points or so away from where we are now. There's other pockets of support down here, but it's a really big zone of support running from 104.60 through to 105.20. So, if the euro was going to turn around, these are the levels to watch out for. We're seeing this dollar strength because, it looks like, Donald Trump is going to have a sort of a bit of a stimulus program for the US economy. It looks like, they're talking about inflation going up. There's expectations now we'll see more rate rises from the Federal Reserve, the US central bank. All of this is good for the US dollar, and of course sees other currencies weaken against it. So I think it's really interesting to watch. I think already today, I think I've heard a couple of people talking about, we're going to see parity, we're going to see the euro worth $1, 1-to-1. And I think if that sort of noise gets a bit louder, that's the time to buy the euro, because everyone was saying that back in February last year. So let's see what happens. But at the moment, undoubtedly, let's flip over to the hourlies. This is a market that's weak. We've seen on the hourly candles, it hardly manages to get any sort of rallies together. We see rallies that last a little bit, but again, don't really take out, my favorite topic, the previous high from the day before. So any rallies in the euro have been opportunities to sell. The same way that way was yesterday, really late last night. It looks like about 11 o'clock last night. we saw a recovery, a 100-point recovery in the euro, but it only pushed back into the middle of the previous day's range before bang, off it goes again. So for now, that euro dollar trend is still down. There are those big levels to look at on the historical charts, but let's see what happens. I think I'd only think about trying to pick the bottom. The very first thing I'd want to see is this market actually break the previous day's high, and we've not seen that since the morning of the election results, when it zoomed up and gave back those gains. So this is a market that is very weak, euro dollar, but it is really interesting down here. Pound against the dollar, I'm tempted to be a buyer here. I think this was I think my idea last week was to buy the euro, and that wouldn't have worked out. And the other idea last week was to think about buying the pound, and that did okay. We did have that bit of a surge, but it has come off since then. But again, if we look at the longer term view, the pound is a bit of an odd one, of course, I think, because of the weakness that we've seen since the EU referendum and that flash crash that we had at the beginning of October. It's a bit of a strange one, the pound. But I think we have seen. I think I put this on Twitter last week. I don't know if we talked about it last week, but if you were going to draw a trend line, and I don't, stick religiously to trend lines, but I will plonk them on some charts just so I can remind myself what the trend actually is. The trend since referendum day has been, something of an odd one. But you could argue that trend has broken, and I think the level we were talking about in recent weeks, sort of 125, 126, that sort of the post flash crash levels, sort of about here, when it broke through this sort of area, it does suggest that maybe, we could see a stronger recovery for the pound. And if we stick with the theme of trend lines, it does look as if, I suppose it depends as ever where you draw it from, but if we drew it off the lows down here, okay, that trend is still intact. But if we drew what I would think is probably the truer trend, the way it's accelerated since then, which is probably something, it's not very well drawn. Something like that. Well, that's still intact as well. But for me, the big level to watch are these lows. These lows from last week. So if we just zoom in a little bit, I think there's an argument to be a buyer. I think is if I cut through the flannel, I think there's an argument to be a buyer, pound against the dollar, and I would want my stop below 123.50. We've seen the 123.50 level hold last week. We've seen a few retests of it. Then the market moved about 300 points higher, maybe even slightly more than that, and it spent much of the last few days coming off. Pretty much in tandem with everything else. So I'm just something odd going on my screen. I'm just making sure it's all right. Yeah, so let's take a look at that. So let's say so the market's coming off. We saw a low for the move yesterday. So I was watching it. And I had no interest in buying because it was still going down. I could also argue that the fact it still hasn't managed to break the previous day's high, that maybe it's another reason to be a little bit cautious and sit things out. But I think if you really wanted to buy the pound, now looks to be a pretty good level. The risk reward is good. We had that trend that's in place. You could argue that downtrend is over. It hasn't managed to punch out though through the previous day's high, but we have seen it sell off over the last 4 or 5 hours, and we're seeing a little bit of strength coming in. So if I was a buyer at 124.30 with a stop loss somewhere the other side of 123.50, so let's say what's that? Let's say the stop loss goes at 123.35. So it's a big stop loss. So it's a 95-point stop loss. But I'd be looking potentially for a 280 point and maybe even more move higher. So I think for FX, we'll look at another interesting pair in a minute, but I think the pound against the dollar is an interesting one down here at these levels because 23.50 has done such a good job of propping the market up. Okay, so I think that's one to keep an eye on in the next sort of day or so. Dollar yen, of course, the old favourite, the one that we've been staring at for ages, wondering what is going on. Is it making a base? And the move we've seen, you could look at the move over the last week. It's moved about 800 points, maybe a bit more. But what we've been looking at was that downtrend that had been in place for much of this year. So if we plonk our line on there, I don't know if we go from here. There we go. So we had this downtrend, and we had, dollar yen could not break 100. We'd see weakness down to 100, weakness down to 100. See the buyers come back in, and the market just kept going up. And now, I was saying what we really need to see is strength through these highs, and we've got it. The last few days, it really has rocketed and has taken out those highs. So I do think that's a trend reversal in dollar yen. We're 900 points off the lows of that trend, but that is a trend reversal. So for me, the tactics would be, the ideal setup is if it all falls all the way back to here and then bounces. I don't think we're going to get that, but for me is to look to buy the dips. So if I probably wouldn't want to buy it just yet. I want to maybe leave it a bit to settle down. But let's see. Let's just have a look on the hourlies, see where the levels are. I mean, it is really racing away. Again, for me, the closest I want my stop at the moment, it's going to be more than 100 points away, 150 points away. It's below these old lows from just 2 days ago. The lows from 2 days ago. I think it's an obvious trend, but when a trend is as strong as this, it's always difficult for me anyway to pick my stop loss points. But I think any weakness in dollar yen, I'd want to be a buyer, definitely. But it's really interesting that it has, because of what's happened with the election, it really has broken the back of that downtrend and looks to be starting maybe a much stronger and higher recovery. A couple of final ones that we'll look at. So like I say, for me at the moment, the immediate interest in currencies is pound against the dollar. But because we're seeing dollar strength everywhere, we're seeing some old favourites, some big old trends may be changing. So this is the Aussie dollar, US dollar, so Australian dollar, US dollar, and we've been, I think maybe a bit like dollar yen. It's a bit more advanced than dollar yen, but we'd had this. This is the weekly chart we're looking at now on the Australian dollar, US dollar. We have. Do we still have it? I suppose we do. We still have that downtrend that's in place. And I think what I've been sort of banging on about, a little bit like dollar yen, is, well, can it crack? Can it crack this downtrend properly? The high is just above 78, and really start to build up. We'll see much stronger Aussie dollar recovery. And we haven't. It's just been banging against that level, and we still haven't got it. And again, I think if you and the aggressive trade here, we're back on the daily charts now, is to be a buyer of the Aussie dollar. Is the assumption that the weakness has gone too far. We've got some really big levels coming up for the Aussie dollar ahead of 7,400, 7,400, 7,450. And if the market's going to bounce from anywhere, then this is the level. I think if it breaks below here, the risk is that longer-term downtrend is still in place, and down we go again. But I think Aussie dollar is an interesting one down here. I think the argument for buying the pounds, if you really want to buy something against the dollar, is stronger. But I think it's another like the euro, it's another one to watch to see how these big levels perform. And the final one is again a close relation of the Aussie dollar. I don't know how close they are, but the New Zealand dollar. This is one that has had a good trend. We've picked up on this trend a bit. I think I've just clicked the wrong thing. Had a good recovery trend this year, but it has lost a lot of that momentum, recently, as you can see here. And if we flip over to the dailies, it's interesting because it's coming back to the trend line. So even though we've seen a lot of dollar weakness, it's not going to go. Sorry, dollar strength. It's not going to go on forever. It's not going to be a one-way bet. We are going to see something of a pushback. And for me, this is what makes it interesting. This is New Zealand dollar, US dollar. So we had this trend for much of this year, chugging happily higher. Away we go. Makes a recovery high in September. Sells off, and I thought then, okay, we're going back up. It's here, we're going back up and through. But it hasn't. The market's come off. But like a lot of these currency pairs we're looking at the moment, there's lots of good support, not a million miles away from where we are. So on the big one for the Kiwi, the New Zealand dollar, is 69.50. Which is only 100 points below where we are now. So I think this is another one that's an interesting one to keep an eye on to see just whether it's going to reverse off these levels. So I think it's really interesting down here. Well, someone's just asked, can we have a look at New Zealand dollar, Canada? Let me have a quick look. I must admit, that's not one I look at very often, but let's take a look. how much data we got there? Let's go on the dailies. I think if you're short, it looks a pretty good short, doesn't it? I mean, we've got maybe a bit of pockets of support coming up ahead of 95 or just below 95, but it's still weak. That's a really odd looking candle today. I'm wondering if that's some sort of no, it's not bad data. It's just an odd looking candle. Maybe it doesn't trade that much, but yeah, the trend is still down, so you'd still want to be short that. So let's move off the currencies. But for me, pound against the dollar is really the interesting one. See, it's already moved 8 pips since we last looked at it, pound against the dollar. So we'd already be in profit. But let's see what happens. I do think it's interesting to see how it performs down here. Let's talk about the indices. It's been an odd week for indices. I have done some day trading this week. I think I made my 5th trade for the week, and on indices I've been doing the Nasdaq, the S&P, and the Dow, and I've been trying out a slightly different approach. And I've had 5 winners on the trot. So clearly I have discovered the secret to the Holy Grail. And this time next week, I'm going to be doing the webinar from Monaco for tax purposes. But it's been quite an obedient market this week. Right? This is the Dow. We'll start off by looking at the Dow, then we'll have a look at the S&P and the Nasdaq. We had. Hang on, I think I've managed to. What are we looking at here? That's clearly that's all of the election stuff. We did see, this has completely wrong-footed everybody. I think it's definitely wrong-footed me. How the market reacted to last week's news of Donald Trump going to be US president. Everyone was thinking, well, the market's going to fall off a cliff. I think there was an article in the FT the week before saying, it's going to be an instant 5 to 7% drop in stock markets. What happened last week? Dow Jones moves out to fresh all-time highs. So it's been a positive reaction by stock markets. But let me make this a really short-term chart, maybe 15 minutes. The last few days have been really dull. So that's some of the volatility end of last week. But these are markets, you maybe see it more in the S&P, but these are markets that are really have been range bound this week, but quite tradable. I think the bias is still definitely up. And what I've been looking at, if I can just get the right chart up. Sorry, I'm just clicking randomly here. And what I've been looking at is my old favourite, the previous day's high and low. So the trade I did on the Dow yesterday. So the only trade I've got at the moment, I'm short the Nasdaq at the moment. So we'll have a look at that in a minute. But the trade on the Dow sold off early on yesterday on the open. So clearly it's a 24-hour market, but it sold off. This is the official open, sort of 2:30, and then it stopped. It hung around, and it hung around for me near enough. The previous day's low was down here, just ahead of sort of 18,815, that sort of area. The market did spike. I don't know, maybe how low below that level? Only I don't know, 5 or 6 points, and hung around. And I thought again, at that pound against the dollar trade, it's a good risk reward down here. The market's a bit rangy. So buy it. I think I bought at 18,825 with a stop at 18,790. So for me, that's a really tight stop. It's like a 35-point stop, and looking for the potential of like a 100-point move back up to the highs. And then it was really dull for most of it, and then started moving about 6:30 last night. So I think I was in about here somewhere, about 3:30, and it went nowhere for ages. And then it started moving, and so I trailed a stop up and came out just ahead of 18,900 in the end. But it's doing a similar thing today. It's a really range-bound markets we're seeing, but I think there are still, if you really want to sit there and watch it and trade short-term, I think there are opportunities. But I think we just need another breakout again. But you can't, it's difficult to argue against the bullishness. When we have the Dow Jones making a fresh all-time high the week before, it's a market that is very bullish, but it's just stalled. Everything's stalled a bit. I think there's a few Fed bits and pieces going on this week, so maybe the market will liven up. But this is the S&P that we're looking at now, and again, that's the massive volatility, obviously, of the election results. We saw that enormous move overnight, then that massive recovery, and then since then the market is just ranging. We've got good support on the S&P. 21.52, and you can see how that level has worked. It sold off November the 10th, came back to it November the 11th, and came within a few points of it again, 6 points or so, on November the 14th. So it's been a good level. Looks like the S&P has actually pushed to a sort of a fresh high out of this zone overnight. And again, for me, if it starts selling off today and hangs around yesterday's lows, it looks to be a good buying opportunity. But I think it's only if we see it start to slip below this 2150 mark that maybe we'll see people start to maybe sell heavily. And it's a similar one for the Nasdaq. You know, I'm sure the Nasdaq had an order in, and it got filled. I think about 10 to 8 last night at 47, 72 or 74. I can't remember which one it was. But again, you know, same sort of thing. It's just really ranging. If we plonk a line on like that, there we go. So 47.85. So my stop is at 48.05, I think. And I'm just looking for a move back to these lows. But we saw earlier this week on the Nasdaq, was another one of my trades. Really, you know, really simple setup. It doesn't have to be complicated. It doesn't work all the time. But for me, you can see how important 46.80 has been over recent days. You know, we saw the turnaround, the old the Trump bounce, and then the Trump crash and the Trump bounce. Then a bit of a heavy sell-off, but then 46.80 holds. The market comes back to it the next day, and came back to it earlier this week, and didn't quite get back down to it this morning. So for me, but up here, 47.85 has been a barrier. So it's all a bit rangy. But you know, if I was a betting man, I would be betting for the markets to move higher, for stock markets to move higher. You know, because clearly that is the tone at the moment. It's just been a quiet few days. So look at the FTSE. I think the FTSE is interesting. I had a quick look at that before I started today, because again, you know, clearly it's been following what's been going on in the US, same sort of volatility. And we were building, you know, something of a trend from November the 11th. So over the last 5 days or so, we're building a trend, and it's really given that up today. But you know, with my sort of looking at the big levels again, for me, it's an interesting one. The FTSE, we've got big support down here, 67.08. So the market's currently 67.40. So we've got good support, 67.08. We've got other support coming in at 67, whatever that is, 32. Let's plonk an oscillator on this. I'm never a massive fan of the old squiggles, but let's put one on. Let's put relative strength on, 10-day relative strength. So the market is understandably heading towards oversold after the sell-off we've seen from the 68. You know, we've seen nearly a 100-point drop, I suppose, haven't we, off these overnight levels? So from yesterday. So it's really interesting down here, I think, to see what happens. But for me, I'd be looking for a bounce, potentially, particularly considering US markets are not falling off a cliff. You know, we've got, I expect some buyers to come back in, but let's see how it performs ahead of 6,700. I think it was a similar one in the DAX, the German DAX. We'll do this one, then we'll start looking at gold. The German DAX was similar sort of levels, really, similar sort of moves, where the market has come off, like the UK has. But there's lots of support. You know, we've got a bit of support off these old lows, big support down here on the DAX. There we go, about 10,576, which is what, 80 points away, and 80 is nothing. 80 points is nothing on the DAX. It's a bit of a lunatic market at times. But you know, it's some big levels. So I think there are opportunities, even though US markets have been dull. I think there are still some interesting opportunities out there, particularly given the weakness that we're seeing in the FTSE and the DAX. Right, so stock markets, US bit boring, but I think the bias is still up. European markets a bit weaker, but big support just below where we are. So let's look at the market I got completely wrong. My old favourite, gold. I can't believe it's let me down. What a move we've seen in the price of gold, completely in the opposite direction to what I was expecting. So we had this, you know, again, of course, on election night, we saw a sort of strong move up to 1332-ish. Which again everyone would have predicted, because you know Donald Trump comes in, he's not the favourite, massive uncertainty. People think, what am I going to do? I want to take a bit of risk off. I'm going to shove my money in gold. So you know, Trump win was always going to be good for gold, and we did see that for about 3 hours. But since then, it's just collapsed. Now and again, of course, it's being driven by you know, dollar strength is the story here. You know, and I've been, I think, quite bullish on gold this year based on the trends, but it's sort of it's a bit of, I'm still bullish. I'm not some mad gold bug though, but I do think while we're above that level, let's call it 1200 for sake of argument, then the argument for a higher gold price I think still stands, and it's all to do with the trend over recent years in the price of gold. We've really seen, I think that we saw that clearly that massive run up for gold in the early 2000s, 2010, 2011 peaked out. Then we've seen the slide over recent years, and I think the move we've seen this year does arguably break the back of this downtrend. But really, I think if the recovery story is gonna hold water, it needs to hold above 1200. So I think it's interesting down here, but clearly with the US dollar strength, gold has not been immune from that. It has been, it has taken a pasting. So we'll see. So for me, yeah, as ever, I'm expecting a bounce in the price of gold, but if it goes below 1200, I'll have to revise my opinion on that. And the final one is it's the maniac market, that is oil. Let's take a look. What's this? These are the dailies. Let's break it down to the hourlies. I don't trade oil much. I find it quite a difficult one to trade. And I don't know if it's because of the volatility, and maybe it does get driven by maybe sudden surprise events, sudden surprise announcements by OPEC, that sort of thing. But it's one I look at it every day, but I never really do that much with it. But you can see, and you do get really sharp turnarounds. You can see. I think I was saying last week I'm expecting it to go back above $50, but who knows if it goes to $25 first. We've seen a really sharp turnaround in the price of oil, off $42 a couple of days ago, and it's been briefly through 46. It's 10% move in a major commodity, is a significant move. But it's maybe looking like it's struggling again up at these sort of highs. These old highs from maybe a little bit back here, sort of $46.50, does appear to be something of a problem. I think if we saw it crack that level, then we can start looking for $50 plus. So I do think the recovery story for oil after the weakness we saw earlier this year, that's a story that's still there. But I think from a short-term point of view, and if you trade it and make money, then that's all good. Maybe it suits your trading personality better than it suits mine, but for me, I find it quite a difficult one because of the volatility and because of the sharp turnarounds that we see. So that's oil. $46.50 could be a bit of a problem. Let's see what happens. So just to recap, I'm going to start wrapping things up now. Just to recap, I think for me, the US stock markets are always interesting because of what we've been through, that election, the shock election result last week. So I always watch US stock markets every day and trade them a few times a week normally. I think the bias is still up, but we've got some big support, 2150-ish on the S&P. If that breaks, I don't know if we'll go all the way back down to where we were post-election, but I think we could see some pressure build. But with the Dow Jones making fresh all-time highs last week, it's clearly bullish sentiment out there. We don't really want to be shorting a market that's making fresh all-time highs. So I think for me, plenty of opportunities during the day on stock markets, but I think the bias is still up. FTSE, has been moving. FTSE and the DAX have been moving against what we're seeing in US stock markets, but there are some big support levels coming up. So I think the FTSE is interesting ahead of the 6,700 level to see if that acts as support and we see the market push up. Currencies are really interesting, because of this story of dollar strength that we've seen over the last week, and we have some massive levels coming up in euro dollar. It's going to be, for me, the one to watch. There's still a fair bit of fresh air to go until and if we get down to those levels, but it's really interesting, I think, down here. And then finally, the pound against the dollar sort of slightly taking that US strength thing, the dollar strength thing out of the argument. The sort of the move that we've seen over the last few days has brought us back to what has been massive support at 123.50. So I think it's an interesting one to maybe think about a recovery off these levels and maybe a push back up to the 127. So plenty to keep an eye on. It's a strange time, isn't it? But I think there's still plenty of sort of different and various opportunities out there. If you have any questions after this, I'm just going to flash up my contact details. I've not been on Twitter much over the last week, but if you have any questions about anything, drop me an email, david@tradeafter.com. I do webinars on social trading with Aondo. That's Aondo's big thing, the social trading. It's really interesting, and I'll be doing one next Thursday night at 7:30. We'll talk about the sort of following other traders and how it can maybe help smooth out your own P&L. But for today, I'll wrap things up. So have a good week, and we'll do it all again next Wednesday lunchtime.